You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back on the clock. Time to talk some futures options. Yes, it is time once again for TWIFO, This Week in Futures Options. My name, of course, Mark Longo from theoptionsinsider.com, except no substitutes. Not that there are any, really, but except none nonetheless. Remember, if you're listening to this show, make sure, if you like what you hear, throw a like, a star, a comment, wherever you get it. Could be on our app, our website, could be on Apple Podcasts, YouTube, all the places, Audible, wherever great podcasts are found. We are there and have been there for some time. Some might say we pioneered the Options Podcast out there 17 and a half years ago now, something crazy like that. And of course, if you want more content, you want to come back after Vol Views on Friday, you want to get double pro Q&As like we had this week, you want to get access to the awesome pro podcast feed that has 350, I lose track of episodes waiting for you the second you hit that button. You want to get your name in the hat for a little bit of the old pro trading crate action. Only one place to go, theoptionsinsider.com/pro. The place to go to learn more. As we learn who's joining us on the old CME Group Hot Seat today, I am pleased to welcome back our old friend, Mr. Uncle Mike Tosaw from St. Charles Wealth Management. Uncle Mike, how are things in the hinterlands of Chicago, sir?
All is well. Can you hear me?
Yes, I can. Wow.
Wonderful.
You have solved the technological issues that beset us on the option block just an hour ago. I'm glad to see that. It would have been a long hour if we couldn't see or hear each other, sir.
No doubt about that. That's for sure.
All right, then. To the world of the movers and shakers we go.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers, the portion of the show where we do just that. We break down the week that was, and indeed still is, from a futures options perspective. I'm going to kick things off in the underlying side. And then maybe we'll graduate to a little bit of volatility moving and shaking as well. And Uncle Mike, since you nearly derailed the show earlier today with your legion of technical issues, I will allow you to make it up to me. You've been on the show a few times now. You know how this works. I will allow you to lead the way and run with the movers and shakers this week. So you get to pick where we start, and then you get to run down. I'll do the vol in a little bit. I'll save the vol for myself. I won't make you do that. But can you handle a little bit of moving and shaking, sir?
I'm a mover, I'm a shaker, baby. So what am I picking? I'm picking light side or dark side? What do you want me to pick
You can start, you're doing it. You can start wherever you want, then start from the bottom of the list and move your way to the top, and then proceed to the other side and do the same thing. Pretty easy.
So you want me to start from the bottom of the list, go to the top of the list, and then continue from the light side to the dark side from the show notes with which were sent to me.
Yes, very complicated, I know.
Yeah, it kind of is complicated with that, especially since right now I'm struggling to open the file because it's messing. I'm having more technological issues.
Uncle Mike, I asked for too much from you, sir.
You really did.
I went a bridge too far. I thought Uncle Mike could handle this. Alas, the answer is no. All right, listeners, to the world of moving and shaking we go. I shall choose this week because I'm having fun. My tech is all working. I'm going to go to the dark side because number 5 looks like a product that is near and dear to Uncle Mike's heart. We're kicking things off in the metals. Yup, it's silver off 4.61%. Maybe not as near and dear as it was a few weeks ago on the silver side, but we shall see, Uncle Mike. Number 4, keeping it in the metals, it's copper off exactly 5% on the week. Number 3, you know this name, you love it, maybe you hate it. It is nat gas, a frequent offender, so we're moving off to energy here for number 3, off 5.39%. For number 2, we're going to the ags. It's Chicago wheat off 6.35%. And number 1 to the dark side, I am sensing a trend here, listeners. Number 1 to the dark side, back to the metals. It is palladium off 6.72% this week. So there we go, listeners. All right, Uncle Mike, I think he's got his acting gear. What do you think, Uncle Mike? You think you can replicate that on the light side for us, sir?
Let me see what I can do. Well, first off, going from number 5, we have the real estate sector up 3.25 or 3.29%.
Not as easy as it looks, is it, sir?
It's really not when you think about it. You're the one who talks all day, 24/7. You're doing pretty well with this, Mark. The hot seat is hotter than they say it is. And ironically, with the real estate sector, that was number 2 to the light side last week at plus 3.59%. So real estate is continuing its upward trend with this. At number 4, we have the energy sector that is up 4.1%. At number 3, we have the E-mini Russell 2000 up 4.55%. Number 1 to the light side last week at 4.85%. Crazy story with what the Russell's been doing recently, with it up 10% roughly 10% over the course of the last 2 weeks. At number 2, we have lean hogs up 6.59%. That was number 1 to the dark side last week at minus 21.7%. So the lean hogs are catching a little bit of a bid. Is it going to be a dead pig bounce, or is it something to where it might be a turnaround? And then finally, Mark Longo setting me up for this one. He is just laughing as hard as he can right now because of my sentiment on this underlying. Let's say it. Let's do it. Let's make this happen right now. Bitcoin is up 11.13% on the course of the week. Number 5 to the light side last week at plus 2.36%. I love me some Bitcoin, baby.
My evil plan worked out, sir. I bet you never thought you'd say those words out loud, did you?
No, I never really did. And so just as I'm looking up the line, reading this off, I'm like, you totally set me up with this.
I may have moved the markets just for this one moment. I have that kind of power, listeners. All right, let's see how the vol is shaping up here, listeners. Remember, you can run this report for yourselves. Just type CME and CVOL into whatever browser you're running, and this dashboard will come up. Set it to 1 month for the high-low range. Go to the aggregates tab. You want to see the aggregate CVOLs, not the individual ones. And then you want to go to a ordered list as opposed to a grouped list out there. And then once you do that, listeners, you will see that we are rocking and rolling out here this week. An interesting week. The last few weeks, it seemed like we've been burying the needle across the board on all the CVOLs being at their low end of their range for the week. This week, flip that script. We're seeing most of, actually all of them with the exception of one, are pinning the needle to the upside out there, probably because we're seeing a little bit more red sneaking onto the screens this week. In fact, our movers and shakers, if you look at that graph we tweet out back before showtime, and CME also tweets out, you'll see we're hanging out roughly 50-50 in terms of size movement out there this week. And the largest percentage mover, though, is to the upside. It is Bitcoin. But now on the vol front, it seems like mostly getting a little bit of an injection of vol this week. We'll start at the top of our list. It is energy taking the pole position this week. 47 double is where it's hanging out right now, up nearly 2 points just today, 1.88 points today. And again, hanging out at the high end for the week. The low end of its range was 41.75. So pretty much right at the burying the needle on the upside there for energy. We're going to see that a lot this week. Right below it, we have the commodities CVOL, 32.38, up 0.65 today. And on the week, a robust week as well, because the low was 29.67. So again, pinning that needle to the upside right now as we speak, kicking off the show. Right below it, we have the FX CVOL, 6.23, up 0.29 just today. That's a size move in FX. We don't see that too often. We have, and also the low was 572, came earlier this week. So once again, pinning the needle to the upside. Let's go to the treasuries now. The treasury price volatility. Again, that's the more anemic of the two. That's at a 6.07 off 0.09 today. And kind of a little bit off its high for the week, but pretty close to it. The high was 6.16. The low, 5.29. So pretty wide price vol range for treasuries this week, which is kind of interesting. Below that, we have the metals, 1842 right now, off 0.19 today, and hanging out pretty much at the upper end of their band for the week. The low was 17.52, again, hit earlier this week. Then we have the one complex that is bucking the trend. It is the ag product CVOL at a 1972, off 0.55 today. So ag vol coming in today and also coming in on the week. That is the low for the week. The high was 20.58, set towards the end of last week. So ags kind of playing by their own rules this week. They're crushing vol where everything else is pretty much gaining it. And at the bottom of our list, in terms of the biggest loser today, is the treasury yield vol at a 108.34, off nearly 2 points today. And also pretty much pinning the needle for the high for the week. Its low was 94.21. So yield vol once again delivering and doing so again on the show this week. But, you know, Uncle Mike is joining us. He's a bit of a silver aficionado, and silver also coming in at number 5 on our movers and shakers this week. And in fact, metals dominating our dark side this week. So I think we'll start out there first.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody, welcome to the shiny stuff. Head on over to cmegroup.com/TWIFO. And then from there, you're going to go into that asset class drop down. You're going to go all the way to the bottom of the list of metals. And then in product family, you're going to go to the top, which is precious metals. And then from there, we're going to tick one down from gold to go a little bit of silver, Uncle Mike's favorite. Not looking so hot right now. 30.2 off, nearly a full dollar this week. That puts it off a little over 3%. Of course, you go back to the end of our show last week, off 4.61%. Uncle Mike, you know, silver has kind of been the story of the last few months. It's up, it's down, it's slinging all over the place. We were seeing crazy strangles and risk reversals going up a few weeks ago out here in silver. I'll have to go see if I can pull those up so I can tell you the exact strikes, but those were pretty wild as well. What's been catching your eye in yet another topsy-turvy week out here in silver, sir?
Sorry, I just muted myself by accident. Not technological problems. I just pulled an Andrew just a second ago. So in looking at silver, it's like we continue to channel, but we're channeling at a higher level. So in looking at it, we had our first big breakout, I would say. Like we were way down in, let's say, September of 2022. We're at a low. And then comes up a little bit towards the end of 2022. And then from there, we kind of channel a bunch in 2023, channel a little bit more going into the end of February. And then silver actually rallied almost 50% from the February lows. And we're not quite back at the high levels that we were roughly in late May. but we still continue to channel at those high levels. And so right now, the question is this, is that are we channeling at the high levels to take another leg higher? Or have we reached a point of resistance to where silver may go right back down to where it was? One thing about silver is it'll bore you to death for years and years and years and years and years and years. And then all of a sudden it's up at the mid 40s. That's kind of what it seems. And so for the time being, we are continuing to channel in the silver world, but we're not getting the freakish breakout that comes with silver, how it comes like a thief in the night when it feels like almost nobody expects it. It'll channel and channel and channel and channel and channel. And then all of a sudden it breaks out when nobody expects it, except for the people that were actually long it. So for right now, we're continuing to channel, but we're channeling at higher levels.
Continuing to channel, but doing so at higher levels, listeners. We'll see if we can dig and find the strikes on those funky spreads we saw going up in silver not too long ago, listeners. Let's get out there right now. Let's fire up the old TWIFO machine, see what's lighting it up out here in silver. Is it a banger week? The answer is no. Only about 48,000 contracts on the tape right now. It's kind of a light week for silver. We usually see it at least north of 60,000 this time of the week. But you know what? Unlike a lot of the equities and some other products, it's not all 0 day in the metals. It goes a little bit farther out. Right now, about 32, almost 33% of that paper is going up in the September contract. Has nearly 40 days to go. So we're going to hang out there. What is the vol, you might be asking, in September silver? Well, it's 28.40 off, almost a full point this week, about 0.9 on the week. So silver vol coming in, even though, like we said, on the week in aggregate, pretty much all of the CVOLs were pretty much pinning the needle to the upside. So kind of interesting action out there. In terms of skew, it's a shiny metal, so you know the upside's going to be bid and the downside's going to be offered. The question is just how much. Let's find out. Last week, the puts were 7.1% cheap. This week, 8.6% cheap. So no joy for the puts. The calls, 11% bid last week. This week, pretty close to that same level, about 10.7% bid. So not a huge evolution on the skew front this week. And in terms of action, the big dog out there, like I said, with 40 days to go, with the future at 30.20 right now, it is the September 35 calls. Lighting it up this week to the tune of about 2,000 contracts. The big day was yesterday, 830. Looks like some folks were bailing on them yesterday. Then we have today about 600 against an OI of 2,500. And then we have 400 on Monday, also closing, and about 200 on Wednesday, slightly opening there. Looks like we have closing on 800 as well yesterday on the 32. So maybe somebody unwinding and vertical. In fact, if you look at the size volume for the week, 35s and 32s are almost identical, about 1,900 each on both of those. And they line up pretty close as well, about 500 trading today for both, 800 and change yesterday for both, about 200 and change for both yesterday, and about right around 400 for both on Monday. So it seems like we have some unwinding or perhaps some rolling on Monday. It looks like it might have been a roll. It was closing on the 35s, opening on the 32s, which makes some sense. I don't know if you'd be closing on both unless you're just bailing on this spread entirely, which it was closing on both legs on Wednesday, it seems like. So perhaps they just got the heck out of Dodge and we're tired of it. And it's trading about 500 times again today. Worth noting, 1,800 of the 32s are still open coming into today, and about 2,500 of the 35s. Uncle Mike, September 32, 35 vertical. Would you be a buyer of that? Would you be maybe using that to roll down? What are your thoughts on that one right now?
I'd probably be a buyer at this point. Yeah, I think I would be a buyer. I think that, if I had a gun to my head, I would definitely go with buying, I believe.
Yeah, for all the outlandish stuff we've seen in the upside in precious metals, that seems fairly reasonable. Slightly out of the money, upside vertical. I can get behind that. We usually see extremely far out of the money nonsense and butterflies and ridiculous things that...
The 10,000 calls on gold.
Yes, you're not that far out of the money in terms of what you're laying down out there. Let's keep rolling. Let's see what else is lighting it up out here this week, listeners. If you like yourselves a little bit of September action, how about some juicy puts coming in at number 3, listeners? Because we got some today to the tune of about 1,100 of the September 29 puts. And again, these are pretty active all week long. Doesn't look like it lines up perfectly with the other paper that it could be maybe using the puts to finance the vertical, so a bit of a bullish risk reversal. But they are trading pretty actively all week long. The big day was Tuesday, about 500 on Tuesday, almost 400 yesterday, a couple of hundred today against an OI of 700 and a handful on Monday only. So interesting. It doesn't seem like it's related paper, but you never know out there, listeners. So a lot of SEP action dominating the tape out here in silver. Let's look really quickly, see if you see any other interesting and or aberrant prints. Let's go a little bit closer to home, actually. Let's go to the AUG contract that goes away in, a whopping 8 days. Because that's where we find the 30 calls lighting it up this week. 1,722 times, almost all of that, 1,627 going up today. Guess what? That is opening because the OI is only 1,335. So AUG 30s, again, we're at a 30-20, so those are 20 cents in the money right now. Opening, I don't know, Uncle Mike, would you be taking a flyer with about 7 days to go on the AUG 30s right now? I don't have a price in front of me, but I know it was at least 20 cents. What are your thoughts, sir?
Probably not. I mean, I like the spread that you were talking about a little bit earlier. I like that concept a little bit better, but 7 days, it's you have to have the event happen really quickly for that to work. So I'm typically not a 7-day flyer kind of guy.
Not Uncle Mike style. We know what his style. He likes a little bit of precious stuff. Since the metals are dominating out here, we have palladium number 1. Obviously, not a lot of options paper there. Copper number 4. They do some paper out there. So Uncle Mike, I'll let you choose. Do you want to go the other shiny stuff, gold, next, or do you want to go base? You want to go copper?
You know what? Let's go with copper. Let's do that. Something different.
That is something different. I don't think you and I have discussed copper in the past.
I don't think we have.
So let's mix it up. Go out of that product family. Go out of precious. Go down 2 slots to base, listeners. Then right at the top of that list, you will find good old copper. Copper been an intriguing one to talk about of late. Doing a lot more paper these days than it did when we first spun up this show back in the primordial ooze days of the network. Copper, you can argue, obviously, often used as a byword for what's going on out there in China. Right now, copper feeling the heat, so things not robust out there in China, obviously, as well. Not an accident that those two are moving in lockstep again. 426 right now in that front future in copper, off 33 cents or a little over 7, about 7.2% this week. Of course, you go back to the end of our show. Last week, it comes in at number 4, off 5%. And in terms of action, actually pretty close to silver. 50,000 on the tape right now. So copper, no slouch out there on the old options front. Uncle Mike, are you a big copper watcher? And if so, what's catching your eye out there?
I can't say that I'm much of a copper watcher, but I do think I actually feel it is going to be pretty important with the upcoming elections. And I feel that it could go up or down either way, just depending on what policies come out. I don't know if I necessarily have, say, that Biden's pro-copper or anti-copper or Trump's pro-copper or anti-copper in terms of how it'll be. But as more policies come through and more things happen, I could see that getting some movement in the next few months.
A lot going on with China now that we are in the height of the political season out there, listeners. So let's see what is lighting it up out here in copper this week. Again, it's very similar to silver. 50,000 contracts, this time half. Almost 51% of the paper going up in that SEP contract has about 40 days to go. We're at about a 426, like I said, in that future. The vol in copper right now, 2172, also off almost a full point, about 0.9 on the week. So 2 metals coming in on the week. Interesting that we're seeing that CVOL action. I wonder which metal is juicing up the CVOL out there. In terms of skew, same deal out here, but we don't see the bid traditionally as aggressive in copper as we do in some of the precious metals, except for this week. Looking more like a precious metal this week, because last week the puts were 1.7% bid, so not much, kind of flat, or 1.7% cheap, kind of flat, and the calls were 3.6% bid, so not a crazy skew. This week, looking more impressive. The puts 8.8% cheap, starting to sound like a precious metal, and the calls 10.3% bid. That is definitely sounding like a precious metal. Let's go see what was lighting it up out here in September, shall we, listeners? If you had the 470 calls, again, we're hanging out at a 426. If you had the 470 calls for about, 2,600 contracts this week, then you are the winner chicken dinner. The big day was Tuesday. We're about half of that, 1,300 going up on Tuesday. Looks like paper was closing there, so maybe some folks deciding to get the heck out of Dodge on the 470s. And then about almost 1,000 going up today against an OI of 2,000. So they could be continuing to close. 300 and change on Wednesday, not much on Monday. So most of the action Tuesday and today. Worth noting, we had action on the 445s as well. It was closing on the 470s. So you might be forgiven for thinking, yeah, maybe they rolled down to the 445s because they were opening. But it was a day later. They were similar size, close to 1,300 contracts each, but they closed the 470s on Tuesday. They didn't open the 445s until a day later. So taking a bit of a leg risk out there, it's possible. We've seen crazier things out there. I mean, the size does line up, just the execution kind of off out there. And the total size, I mean, they're not trading in much of anything the rest of the week. It was just on Wednesday. So kind of interesting, but doesn't exactly line up. But again, we've seen weirder stuff. And then if you are looking at the put side, the 420 puts, these are pretty much the at-the-money puts, so these make some sense. 1,700 contracts going up this week. Almost all of that, 1,600 going up today. That is clearly opening because we have an OI of just 563 out here. And then right behind it, we have 1,600 of the 4 puts going up this week. Again, all of that today, 1,583. So it looks like we have a 420, 440 vertical going up here today. So intriguing stuff out here. Also worth noting, the 430 puts going up about 900 times today, 800 and change. So if it's 800 and change against 1,600 of the other two, we could have a funky ratio spread here as well, taking off the 430 puts and putting on maybe 2x of the 420 put spread out there. Again, we've seen weirder things. If you have those 430 puts in your back pocket, you're probably doing all right. In terms of other action out here, actually, you know what? It's like we missed one here, listen. We kind of buried the lead. Let's go a little bit farther out. Let's go out to November on our list, listeners. That's the metals action we know and love. Longer term upside. How about the 5 calls in November, listeners? That's where the action was. 2,871 of those bad boys going up this week. Again, we're at a 428 out there on the November future. The vol out there, 2167. So everything about the same going out to November here. Skew-wise, those calls were 10.5% rich this week. Looks like a lot of that action coming in those 5 calls. All of that today. So Uncle Mike, we've got the 5 calls going up in November. Roughly 75 cent out of the money calls. They got 102 days to go. About 2,846 going up today. The OI is 7,700, so it's anyone's guess what they were up to, if they're bailing on some of these, or if, the way metals trade, they're probably opening. What do you think? A little bit of November 5 action? Does that float your boat, sir?
It kind of would. If I was going to get into it and I had a sentiment that was bullish, I don't think I'd be against doing something like that. You got time for the trade to play out. You have the potential volatility of the election season coming up. And if something crazy happens, or if something, just anything to create a little bit of a move, I would say I would probably want to stay in it for like 60 days. I don't know if I would want to have it going into expiration, but I do not dislike that trade as being long.
There you go. The Rock Lobster always jokes when he comes on the shows with me that he comes away with a lot of trade ideas. Maybe we got you a copper trade idea. What do you think?
I would not be against it.
Is that part of the strategic night, a little bit of copper, or is that too base for you?
It actually would be too base for us, but thank you for asking.
Speaking of asking, sir, where should we go next? We hit the metals. Do you want to go a little bit of equities? We got nat gas lighting it up. You got your favorite Bitcoin. We could go somewhere else. Where do you want to go, sir?
Let's go with equities. In particular, can I make a request for the Russell?
Yes, you can, sir. I've already pulled it up on my screen. It's like we've done this before once or twice as we head on off into the equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, it's time to get weird and wild and break down this crazy action out here in small caps of late. If you've been under a rock for the last couple of weeks, it seems like the algos woke up last week, listeners, and decided, you know what? Time to dump the names that we've been riding for the last few years, the mega caps that have been driving the S&P and the NASDAQ, and just funnel all of our money into small caps and some of the Dow, because that's pretty much what we've been seeing out there for the better part of the last week and a half or so. It's just aggressive sell-offs in the major S&P and the Qs, and then just insane rallies in small caps and in the Dow. We saw the Dow popping 700 handles at one point last week. We saw the Russell 2000 moving, I think, 3.5% in just one session on the last 10 days. It's pretty much had a year's worth of upside already. It's been insane movements out there. A lot to unpack. Uncle Mike, the folks want to know, what are your thoughts on this crazy, crazy action in small caps, sir?
Well, at some point, it's going to have to move in one way or another to where we get certain types of sector rotation. Not sector rotation, but cap rotation from large cap, mid cap, small cap, and that money needs to go somewhere. One thing that I'll often talk about on the option block is that if stocks and bonds and just everything is down one day, the money's going to appear somewhere, maybe not necessarily in the next day or the next few days, but at some point in the near future, one of those is going to rally, as that's where the money went. People don't just take money out of investments and put it into a mattress, at least not literally, or at least big money people typically don't do that. But it's going to appear somewhere. And so when you have an S&P 500 that has rallied so ridiculously like we have, and you still want to be invested in stocks, at some point, there's going to be some type of attraction to small caps or mid caps or whatever the case may be. And so I just think with right here, there's a lot of reason to believe that people with larger amounts of money, and this isn't just the small caps. If you look at the S&P mid cap, that's had a nice little rally as well. Money's got to flow somewhere. And if all of a sudden, you know what, I've been on the sidelines forever and I want to be a part of this market, but S&P at these all-time highs, maybe I want to do something a little bit different. Small caps have a reason to shine. And I just believe that they've just been kind of, I don't know if puttering around for the last few years is an ideal term for it. But on here, if we're still not at the highs that the Russell had back in November of 2021. So when you channel for a long enough period of time, eventually, and it's really not been too much of a channel. I mean, it's been a pretty big channel that the Russell 2000 has been in. At some point, you're either going to get buyers or sellers, and we got some buyers recently.
Yes, we do indeed, listeners. Have you been part of this crazy, crazy rotation out here? I'm curious. Are you diving into all things Russell 2000? Certainly seems like somebody is this week, listeners. We've been talking Russell 2000 on this show forever, for quite a long time. Back when Sean Smith used to join me on the show on the FTSE Russell Hot Seat, we were diving into the paper then. And, you know, it was sometimes challenging when Russell was putting up 12,000 contracts a week to find something interesting to sink our teeth into and analyze for you folks out there. Those days are long gone, listeners. Again, I'll have to go look and crunch the numbers historically to be sure, but this might be the most active week we've ever seen out here in Rut options. 10 to 12,000 used to be the norm. 20, 25,000, if we hit that, it was a party. It was a celebration. When we hit 50,000, 60,000 recently, I thought, my goodness, the rut has really arrived here. Throw all that out the window, listeners. 148,000 contracts on the tape on the old rut this week. I mean, it's no E-mini, it's no 3-month SOFR, but for rut, This is the mother of all weeks out here. This is some paper, my goodness. And as I was saying on the option block earlier, one of the things I like about small caps, I mean, we broke down the numbers on the option block for IWM. We're seeing a similar breakdown here on RUD options is that it's not just an explosion of 0-day. Don't get me wrong, there is some of that out there as well. But you can go a little bit farther and actually sink your teeth into some of this out here as well. Like today, of this 148,000 contracts, 19% going up in the September contract that has, 63, almost 64 days to go. So we're going to hang out there, listeners. The future at a 22.11 right now. What is the vol in September small caps? 21.25, up nearly 3 points, about 2.6 points on the week. So looking pretty frothy, pretty robust, especially when you compare that to VIX, which until the last few sessions was languishing at around a 12 for the better part of the last month. In terms of skew, this is another thing we've been talking about that makes small caps just stand out from an overall equities perspective. If you listen to our show, any of our shows, forever on this network, when it comes to large major indices, you have investment skew. So what does that mean? The puts are bid and the calls are offered. And that's just the way it has been since time immemorial, the way it will be forever, till the sun goes up. And that is not the case this week in small caps. We are actually seeing bids creep in here to the call wing, which is just fascinating to see. We're looking here, if you go near dated 5-6 day contracts, those calls are about 3% rich right now to the at the money. If you go a little bit farther out where we're hanging out right now in September, it's about flat. So even the flat call skew is something. And you go out a little bit longer term, you go out to like March of next year. Now you're starting to see that discount start to creep in again. They were 13% cheap in March last week. This week they're 4.5% cheap. So still looking frothy. Uncle Mike, what does that make you think when you hear that in a major index product like the Russell 2000, the calls are actually bid, sir?
Wow. I mean, that sounds like we're talking about like an Apple or a Facebook or something like that, or even a gold for that matter, to where we're having frothy calls. And so, wow, that you really don't hear that very often. I'm at a loss for words, Mark. I apologize. I don't have anything to contribute to that except for wow.
Wow, indeed. That's about all you can say, really, is wow, because it doesn't really happen. I traded SPX for a long time. There were some small moments intraday where you might have seen the call wing stiffen up a little bit. We had some intraday upside, quote-unquote, crashes, but those were small, aberrant developments. They didn't really last long, certainly not like this. So a very different beast. We've been saying for a long time the small caps are just marching to the beat of their own drum. And now they're just throwing out the playbook. They're saying, we're doing something completely different over here than everybody else. And what are folks doing out here this week? Well, if you said September 23 halves, remember we're at a 22.11 right now, so 23 half, pretty fair way out of the money. If you said those were leading the dance this week with about 3,700 contracts, you would be the winner chicken dinner. The big dog was Wednesday, about 2,800 going up on Wednesday. It looks like mostly closing. So it seems like maybe some folks getting the heck out of Dodge here on these 23 half calls. Now, the call wing, in terms of skew, stayed pretty much the same this week, so it's hard to infer from that. If past is prologue, people in the past were usually overriding upside in equity indexes, but again, throw all that out the window now in small caps. The call wing is bid, so people are clearly buying these calls, so they could have been buying these calls in the past and then bailing on them this week, or they could have overwritten them and then decided to get the heck out of Dodge when they got a little bit spooked. Either way, 23 halves going up 3,700 times, most of that on Wednesday, paper mostly closing. Right now, pretty much all of them are gone. There's only 542 left open on this strike, so they got in, they got the heck out of Dodge. Then behind it, we have about 3,000 of the 2,300s. Now, you might say, oh, maybe clearly they're rolling, but nope. 2,300s trading all week long, 1,300 on Tuesday, and then 500 each every other day the rest of the week. Total OI right now, about 1,500. So they were closing, but they were closing they're closing every day this week, so it's like paper kind of coming in across the board and just taking off a whole bunch of upside in the rut, which again makes sense. We had an explosive move out there. Again, you don't need to hit your strike in order to make money if you're buying calls, and you don't need to hit that strike in order to take them off if you're spooked, if you're short them as well. So it makes some sense that we would see some closing after an explosive upside move like we've seen over the past few weeks. Something a little bit closer to home. How about the 22 halves also in September? Those are much closer to the fire. 2,600 of those going up this week. Those trading pretty actively all week long. About 800 on Wednesday, 800 on Tuesday, about 600 on Monday. Opening later in the week, closing earlier in the week, which is kind of interesting. Usually, maybe you see it the other way around. When we're having big upside moves, they open it earlier in the week and then take them off later on when they've made some money. But seeing the opposite of that, again, only about 500 left open with about 400 trading today. So intriguing stuff, but not to be outdone. There is some near dated paper as well, because of course there is. This is an equity after all. We've got the 1 day to go, 2,200 puts just on fire this week. Again, we're at 22.11 right now, so we're playing fast and loose with that 2,200 strike. Let's see, how many go up? 3,500 actually. 3,512 of these bad boys going up this week. About 2,400 of that today against an OI of 800 and change. So clearly opening paper going up today. Mr. Uncle Mike, gun to your head. I don't have the prices on these, but 2,200 puts in the Russell expiring tomorrow. We're at 22.11 right now. Gun to your head. Are you a buyer or are you a seller?
Oh, man. I think I'd have to be a buyer at this point.
You got to be a buyer. Yeah, you got to be a buyer. You can't blow out on something like that. I'm
blowing out too much maintenance for that amount. And the only reason I'm a buyer of the puts is just because of the risk of it. But I think we may have had a first on this show today. And over 10 years of being on this network, I actually endorsed a bearish trade. Ha!
There you go. But I think your clients might knock on your door and say, well, Uncle Mike, why are you blasting away at these 11 handle out of the money puts with a day to go in an index that's up 10% in the last week and change? I could certainly see some raised eyebrows on that front. So
yeah, I think I could.
Got it. Just for risk, you got to kind of buy them. 700 on Wednesday opening, 400 on Tuesday also opening. So 2,200 puts being very active out here in Russell. Again, no surprise there. And then if you want a little bit of more out the money action with about a day to go, how about the 2,300 calls? These bad boys going up 2,200 times this week. Again, active all week long. 750 on Monday opening, 400 on Tuesday closing, 500 on Wednesday opening, 557 today against an OI of 549. So maybe they decided to get the heck out of Dodge. I'm guessing not a lot left if they were closing on those. What's the bid for the 2,300 call with a day to go? Not much, even for small caps. That's a pretty long way to go. But yeah, we got paper for days out here. Let's go really quickly find a few more. Let's go out to the 13 day to go July 2,300s. Those also active this week to the tune of 2,500 contracts. Most of that on Tuesday opening, almost 1,500 times. 600 on Monday, only 167 today against an OI of just 530. So looks like they were opening, but not opening all of it on Tuesday. Interesting. 2,300s, again, it's only 2 weeks to go. It's moved 10+% in just a little over a week, so I could see maybe taking a flyer on those if you think this partay shall continue out there. There was some talk about some squeezy action out there in the Russell. It's out. Maybe some folks who are feeling the heat on that, maybe gobbling up those for a little bit of risk control. And let's go a little bit farther out. I just saw, what did I just see? Here we go. Where are we? How about 23 halves? Those are pretty active in August, 22 days to go, about 1,100 of those. Let's go out to these. Let's go out to the end of August. So 43 days to go, 2,400 calls. So almost exactly 200 handles out of the money. These bad boys are pretty active all week long as well. About 2,700 contracts going up here. The big day was Tuesday, 1,129. 700 and change on Monday, 700 and change on Wednesday. Only 26 today, but against an OI of 2,300. They were opening all week long, so 2,400s. 200 almost handles out of the money with a little over 40 days to go. I don't know, Uncle Mike, is that on your YOLO trade card, 2,400s in Russell by about 40-odd days?
I mean, I suppose if I had a YOLO trade card, why not? I mean, stranger things have happened with the fact that it's gone up 10% in a week. So if I'm doing YOLOs, I actually wouldn't mind doing that if I'm a YOLO kind of guy.
Speaking of YOLOs, I was talking about it earlier. Our producers just dug it up. It was our show from back on June 27th, listeners. We were talking about silver, I guess what can only be described as YOLO calls. I believe at the time, silver was in the high 20s or low 30s. I forget the exact price. And we saw 51,000 of the August 75 calls going up opening on that day. And we talk about crazy upside. That's a pretty aggressive trade. Is that in your YOLO trade card, Uncle Mike? Silver August 75s, 51,000 times?
No, absolutely not, because I'm willing to bet I could probably buy the 50s for a similar price, or the 60s or something. I think we talked about that on the last show. If you're going to YOLO, at least YOLO intelligently. So no, I wouldn't even touch that with a 10-foot pole.
Yeah, that's the thing about all this quote-unquote meme paper, and this could certainly be described as that as well, is that it just seemed to be throwing out the options handbook in the sense that it's just conventional accepted wisdom. It makes sense. If you want to do these crazy YOLO trades, that's fine. Do what you got to do. But if there's strikes 10, 20, 50, hundreds of handles lower if you're buying calls, or on the upside if you're buying puts, that are offered at the exact same price, and you're not choosing to buy those for whatever reason, you're buying 10, 20, 50, hundreds of handles above for the exact same outlay, that makes literally no sense. There is no economic reason to ever do that. Yet we're seeing that time and time again. NVIDIA, 200 calls with a day to go when the 160s, 170s are all offered at, the same price. There is no logical reason to ever do that. Yet we're seeing that time and again. That's the biggest head scratcher for me, Uncle Mike, on all this meme quote unquote paper, is the fact that they are just ignoring much better options that they could buy for the same price. I don't know. I can't wrap my head around it, Uncle Mike. Can you?
Twofold. So number one, it is like going to a car dealer to buy a new car and insisting on paying extra, and also insisting on not getting the extra options on your car. That's kind of the best way that I can think of it. Number two, it does show the need for options education. And I guarantee you the people that are buying those YOLO calls that don't make sense for reasons we described, they don't listen to the Options Insider Radio Network.
Clearly there's a size few of them out there, because they're putting some size in these ridiculous trades. But you're right. It's like going to the car dealer and say, I'll pay through the nose for that. And yeah, take off all those cool options. I don't want those. I just want to pay more for less. That's exactly what you're doing. Speaking of less, we're kind of running out of time, Uncle Mike. We got time for one more complex. Anything catching your eye you want me to pick?
Well, I mean, it wouldn't be a TWIFO for me if we didn't jump on the boat with a 10-year note.
All right, to the realm of the treasuries we go.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, listeners, to that drop down we go one final time here for the show. We're going to pop out of equity indexes, go down 2 slots to interest rates, then in product family U.S. rates, then scroll down the product list down to the 10-year, where Uncle Mike likes to hang out. Was it an active week for the 10-year? Yeah, but again, every week is active. 2.03 million contracts, so kind of put small caps and silver in context. But 10-year, even in a quiet week, is going to put up 1 million contracts and change out there. So this complex just puts up the numbers of the 10-year hanging out 111.055 in that front future, off, I should say, a whopping 0.005 on the week. So it literally unched in that front future. It's not a huge underlying week, which is why we didn't see it on our movers and shakers on the underlying side. We do see it, though, on our CVOL aggregate. Once again, Treasury yield vol, the most explosive number on the list at 108 and a third, and also the biggest range on the week, 94.21 on the downside and 109.72 on the upside. So Treasury, from a price volatility perspective, nothing to talk about. The price vol right now in the 10 years at a 4.4, so anemic. Yield vol, though, the volatility of that yield, explosive. So I know that's sometimes hard for people to wrap their heads around, how something could be explosive in an otherwise quiet product, but that is the case. Uncle Mike, sir, what's catching your eye in yet another explosive yield vol, but a sleepy price vol week for the rates, sir?
An explosive yield vol but a sleepy price fall. Well, it's definitely a sleepy price fall. There's no doubt about that. Just looking at a chart, it just looks like a flat line. It's one of the ones to where if I were a surgeon or if I was a doctor, I would think this patient is dead looking at his heart monitor. So not a lot of movement with it, but I think that I'm not expecting a lot of movement on it between now and the election. Yes, theoretically, the Federal Reserve is independent of politicians, but I really don't think they are, and I don't think they want to have too much movement before the election. So I really don't think we're going to get any rate cuts. I don't think nothing significant. Maybe we'll go a quarter point one way or the other, but I really don't see a lot of rate moves from the Fed between now and the election. Now, let's combine that with the inverted yield curve with which we have right now, to where the 1 to 3 month treasuries are still the king, if you will, from where they are right now. You really don't see this very often, but it has stayed there and it's continuing to go on. Right now, 1 to 3 month treasuries, even 1 to 6 month treasuries are above 5. And the 10-year note, that's slightly above 4. So if you're looking to get higher yield and that's all you want, then you're better off going way more short term than long term. However, the disadvantage to doing something like that is if the yield doesn't stay and all of a sudden the very near term treasuries go down to like 2% after you're done with it, and the 10-year note goes down maybe a little bit more than that, maybe like from 4 to 3.8 or something like that, well, then you're not locking in for as long a period of time. Or let's say the 10-year note were to go significantly lower as well. Well, if that's the case, then you missed out on locking in for 10 years. So I think it's just interesting in that we're not moving a lot, but what makes this it fascinates me, quite honestly, that we're staying this still for this long with the inverted yield curve with which we have, and stocks are at an all-time high. So whenever you think about typical correlations and things like that, whoever thought of those typical correlations was not a student of the markets of these last 2 years, that's for sure.
You're not joking about staying still. I can't remember the last time we had an asset on the show that moved 0.005 on the week, or whopping 0.001%. It's literally unched from Monday. There's nothing going on price-wise here in the 10-year. So excellent job on your selection, Mr. Uncle Mike.
Hey, if for the degenerate premium sellers out there right now, they're loving me.
That's true. They're getting that hefty 4%. That's juicy. You can't ignore that hefty 4%.
Well, it's not moving. They can relax.
There you go.
It's not moving.
There you go. They're implied versus realized gap enormous here.
Sell a straddle, take a nap.
You literally can do that in this name this week. What are folks napping it up out here this week? Listening, see what I did there? They're going out 8 days to the 111.5 calls, which are pretty much close to at the money. We're at pretty much 111 even right now, listeners. Again, the vol 4.91 up 0.22 in that 8 day to go contract out here in August. So not nothing from a vol move, but certainly not explosive. The skew on the call side is literally unched. 1.9% bid last week, 1.9% bid this week. A little bit of evolution on the put side. 5.1% cheap last week, 1% cheap this week. So a little bit, I emphasize a little bit, because a few percent when you're starting on a sub 5% level already is not a heck of a lot to write home about. This is why the rates don't make it on too often outside of, those explosive Fed week and everything else. In terms of action, the volume is there, though. That's the thing about it. It's a sleepy week, but the volume is there. Again, 2 million contracts on the tape. 106,000 of the 111.5 calls are leading the dance out here this week. These go away in 8 days. So by way of comparison, you could take copper and you could take silver, add them together, and you just about equal what is going up just in these 111.5 calls that expire in 8 days in the 10 years. So even though it's doing literally nothing, it is still printing paper out here left and right. What was the action such as it was on these 111.5 calls, listeners? Well, let's find out. The big day was Wednesday, 37,000 going up on Wednesday, mostly closing there. 31,000 on Tuesday, also closing. 19,000 today against an OI of 145,000 contracts. And then 18,000 on Monday, slightly opening there. So back and forth week on these 111.5s. Let's look really quickly, see if we can see any other interesting. This is all at the money prints for size. We've got the 111.5s trading that go out in 6 days as well. We've got the 111 puts that go out tomorrow, trading 74,000. 111.25 puts going out in 15 days, trading 55,000. Yes, the excitement that is the 10-year. Only when Uncle Mike's on, listeners. But, how about this? How about the 113s that expire in 36 days in September? They went up 105,000, and that implies a whopping 2-point move in the 10-year. I don't know, Uncle Mike, 113s opening for size all week long, 105,000, including 53,000 going up today against an OI of 77,000. A 113 strike in 36 days? How does that float your boat?
I don't know if I would want to do that one, but stranger things have happened. So I guess if I had to do something, then perhaps what I could do is, with all my capital, be long short-term paper, meaning I would buy maybe the 1 year, and then if I'm concerned with missing out on the big run in the 10-year, maybe buy some of those calls. I'd consider doing something like that if that's how the trade was set up.
2 points in 30-odd days. It seems like a pretty sizable move, but we've seen crazy things. We've thrown a lot of quote-unquote YOLO trades at you this week, Uncle Mike. You got to pick one. You got the AUG 75s in silver. I think they were, 30-odd days ago, 2400s in small caps. Or you got to buy these 113s with 36 days to go in the 10-year. Pick your poison, sir.
I think I'm going to go with the puts and the Russell if I have to pick, being long the puts and the Russell. See how you've painted me into a corner, Mark? You have forced me to pick a bearish trade.
Oh, the one-day puts. You're talking about the one-day puts. Yeah. I was making it nice. I was saying you could go the 2400s going out about 30-odd days. You could pick those if you want as well.
No, I'd still do the long the puts of the Russell. If based on all of these trades you've mentioned to me, I think you were like 8 points below the money in the Russell. So I'll go with those puts, and then you can be. I hope you're proud of yourself. You forced me and painted me into a corner of being a bear. Thanks a lot.
We are very proud of ourselves, listeners. And on that successful, triumphant note, we'll get out of here for this week. Man, a crazy week. Silver, 10-year, Russell 2000, all copper, all sorts of madness. That's why you have to tune in every week on the show. Even though, when Uncle Mike comes, he's going to bring up some of his favorites, even if they are quite literally a snooze fest like the 10-year this week. But at least we got him to swing a little YOLO dice, even if his YOLO trade was only 1 day to go. All right, Uncle Mike, if folks want to reach out to you to talk about the snooze fest that is the 10-year, or maybe a little bit more rockin' action in small caps or in silver or anything else, where should they go? What should they do?
By all means, if you're looking for a financial advisor that is not afraid of the option product, check out my website, stcharleswealth.com. Book an appointment with me. And also, you can follow me on Twitter at Mike Tosaw, Tosaw. I try to put out a lot of content, and that is where I promote a lot of my educational webinars as well.
At Mike Tosaw on the old Twitters. Give him a follow. He's got some great stuff coming out, including a lot of webinars. He's back on the webinar train over there, so get some learning on at Mike Tosaw, Tosaw, on the old Twitter machine. You know where to go to get these reports. CMEgroup.com/TWIFO is the place to dig into all these crazy options prints. You want to do the CVOL, just CME Group and CVOL into any browser, and you can find that dashboard. That's available for everybody. And then, of course, come back again tomorrow, noon Central, 1 p.m. Eastern, to talk a little bit of vol. Who's going to join me on that show? Well, you got to tune in to find out. And then after that, one final time for the week, exclusively for all you cool kids out there, we're talking a little bit of unusual activity on options oddities. Then we're back again next Monday with the option block and with Uncle Mike. Actually, we're going to be doing it live in Chicago next week on Monday. That should be fun. So stay tuned for a little bit of live action there. And then we're back again next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.